Florida has long been a symbol of sunshine, opportunity, and affordable living. But in 2025, the dream is showing cracks. Behind the glossy brochures of beaches and palm trees, entire communities are under pressure from soaring insurance costs, slowing in-migration, and an oversupply of homes built during the pandemic boom. Families who once rushed into the state are now leaving, while investors are quietly offloading properties. In this video, we reveal 10 Florida cities where the housing slowdown is most visible. From coastal towns to inland communities, these cities highlight the risks of overbuilding and declining affordability. And before we begin, make sure you subscribe to Global Lens for more deep dives into the world's shifting housing and migration trends. Chapter 1. Port Charlotte. Port Charlotte once seemed like a hidden paradise on Florida's Gulf Coast. Known for calm waterways, affordable neighborhoods, and its slower pace compared to Sarasota or Fort Myers, the city surged in popularity during the pandemic migration boom. Median prices peaked above $330,000 in 2022, drawing buyers from across the country. But in 2025, Zillow reports average values closer to $279,000, down about 3 to 4% year over year, with homes taking a median of 97 days to go pending. That's a striking contrast to the frenzy of just 3 years ago, when bidding wars pushed properties off the market in under a week. Overbuilding has left entire rows of new homes unsold. Builders who once raced to keep up with demand have paused projects mid-construction as financing dried up. Adding to the strain are annual insurance bills that often range from $7,000 to $9,000, making ownership untenable for many retirees and working families. Once promoted as a bargain on Florida's Gulf Coast, Port Charlotte now represents the risk of overhyped markets turning into ghost town conditions. Chapter 2. Cape Coral. Cape Coral, famous for its 400 miles of canals, was once the fastest-growing city in southwest Florida. In 2021 and 2022, its housing market was among the hottest in the state, with prices topping $425,000. The city's appeal was simple: water access, sunshine, and endless new development. Yet by mid-2025, Redfin shows median values closer to $350,000, down nearly 8% from a year earlier. In some neighborhoods, particularly those hardest hit by Hurricane Ian in 2022, values are down 15% or more. The supply of listings has nearly doubled, with more than 1/4 of homes owned by investors or flippers eager to sell before values decline further. That investor exit accelerates the downturn as price cuts ripple across the market. Insurance is another major burden. Many homeowners now pay $6,000 to $10,000 annually, costs that function like a second mortgage. With insurance sometimes exceeding rent, both families and retirees are reconsidering their options. Construction delays, vacant lots, and canceled projects now punctuate the landscape of a city that only recently symbolized unlimited growth. Chapter 3. North Port. North Port became one of the nation's fastest rising housing markets during the pandemic. Remote workers, retirees, and families flocked to its spacious subdivisions, pushing the median price to nearly $380,000 by 2022. But oversupply has caught up. In 2025, Zillow places the average home value at $314,000, down almost 10% from last year. Days to pending now average more than 60, compared to less than 2 weeks during the boom. Entire neighborhoods built for newcomers now sit with "for sale" signs lining the streets. Financing hurdles are worsening the problem. Lenders demand higher down payments, stricter credit scores, and sometimes withdraw approvals entirely, leaving pending sales to collapse. Redfin notes that over 30% of deals in the city failed in recent quarters. Foreclosure filings are also rising, though the exact pace varies by source. Many who bought at peak prices are struggling to keep up with mortgages, insurance, and HOA fees. While North Port isn't a ghost town yet, the sudden reversal from one of the hottest markets to one of the weakest highlights the volatility of Florida's housing economy. Chapter 4. Palm Bay. Palm Bay, along Florida's Space Coast, was often seen as a safe haven for budget-conscious buyers. Median values hovered around $328,000 in 2022, making it attractive to first-time buyers and investors priced out of larger metros. But in 2025, Redfin shows values slipping to around $321,000, with homes averaging 72 days on the market. Though the decline looks modest, the undercurrents are more troubling. During the short-term rental boom, Palm Bay became a hotspot for Airbnb investment. But as regulations tightened and visitor demand plateaued, many investors sold off their holdings. That flood of listings added to inventory and depressed prices further. At the same time, the price-to-rent ratio has become unsustainable. Renters pay around $1,700 monthly, while mortgage payments on a $300,000 home with 6.5% interest and high insurance exceed $2,500. Families and investors have little incentive to buy when renting is cheaper, leading to weak demand and stagnant neighborhoods. Palm Bay demonstrates how investor retreat and affordability gaps can transform a seemingly stable market into one that feels eerily hollow. Chapter 5. Port St. Lucie. On Florida's Treasure Coast, Port St. Lucie has long been a family magnet. Safe neighborhoods and a reputation for quality schools drove home values to more than $400,000 in 2022. In 2025, Redfin reports median values around $400,000, essentially flat, but the market's momentum has shifted. Homes that once sparked bidding wars now sit for 65 to 87 days. Sellers increasingly offer concessions, rate buydowns, or price cuts to close deals. A critical factor is the decline of out-of-state demand. During the pandemic, thousands moved from the Northeast and Midwest. With higher mortgage rates and insurance bills, that inflow has slowed dramatically. Pending sales now fail at higher rates. Nearly a third collapse before closing due to financing problems or low appraisals. HOA fees also weigh heavily. In newer developments, costs have jumped from $80 to $200 or more monthly, reflecting the rising expense of storm protection and insurance pooling. These hidden costs are prompting many families to reconsider relocation, leaving a city once defined by growth at a crossroads. Chapter 6. Poinciana. Poinciana, southwest of Orlando, was once a dream for working families seeking affordable housing. Median values around $322,000 in 2022 placed it within reach of first-time buyers. But by 2025, values have slipped to about $300,000, down 2 to 3% year over year. More concerning are the ownership costs. In flood-prone sections, insurance bills of $500 to $800 a month exceed many mortgage payments. Families faced with impossible math often walk away, leaving behind vacancies. Investors too are feeling the pinch. Rents have stagnated, and landlords increasingly offer discounts or free months to attract tenants. Local governments are lowering property tax assessments in some neighborhoods, acknowledging value declines. HOAs are issuing special assessments for storm damage and infrastructure repairs, sometimes amounting to thousands of dollars per household. With homes sitting more than 70 days on the market, subdivisions once bustling with new residents now feel strangely subdued. Chapter 7. Deltona. Deltona, strategically located between Orlando and Daytona Beach, once epitomized the quiet, affordable suburb. In 2022, the average home sold for $340,000. Today, Redfin places the median near $300,000, a drop of 4% year over year. The affordability equation has broken down. Insurance premiums exceeding $6,000 annually, and HOA fees up 40% in some areas push monthly costs far beyond what families can sustain. As a result, some neighborhoods show early signs of outmigration. Buyer demand has collapsed. Homes that attracted multiple offers in days now sit idle for 60 to 75 days. About a quarter of pending deals failed in early 2025, with financing, appraisals, and buyer nerves all playing a role. Investor retreat is visible too. Many rental properties acquired during the boom are now back on the market, adding to supply. For a suburb once defined by growth, Deltona now feels like a cautionary tale of how quickly affordability pressure can hollow out a city. Chapter 8. Ocala. Ocala has always stood apart, known for its horse farms, natural springs, and lower costs compared to coastal cities. Unlike most markets, Redfin shows its median price at $283,000, up 5.5% year over year in 2025. At first glance, that suggests resilience. But beneath the surface, affordability challenges loom. Insurance costs in Marion County have more than doubled since 2022, with many policies now $5,500 to $6,000 annually. Builders have slowed or canceled new developments, leaving empty lots scattered across the outskirts. Homes take longer to sell, with days on market averaging 50 to 80. Local governments have begun lowering tax assessments in some neighborhoods, acknowledging the stress. While Ocala is not collapsing, its case shows how even a city with stable values can feel strained when ownership costs outpace incomes. Chapter 9. Tampa. Tampa was the star of Florida's real estate boom. The metro drew jobs, culture, and migration, pushing median values above $380,000 in 2022. By 2025, Redfin lists the median near $440,000, down about 4% year over year. The issue is inventory. Active listings have climbed more than 50% since last year. Homes once snapped up in under 2 weeks now linger for 45 to 90 days. Pending sales fell nearly 30% in the first quarter of 2025. Sellers are cutting $10,000 to $20,000 from asking prices just to compete. Investor retreat is accelerating in short-term rental zones, where hosts struggle with regulation and falling demand. Vacant properties are more common, particularly in condo complexes once dominated by investors. Tampa still boasts strong fundamentals, jobs, infrastructure, and migration. But its housing market illustrates how even large metros cool sharply when costs and supply collide. Chapter 10. Winter Haven. Winter Haven, nestled among Central Florida's chain of lakes, saw its housing market soar during the pandemic as buyers sought affordable alternatives to Orlando. The median price peaked near $300,000 in 2022. In 2025, Redfin shows values around $297,000, down 4% year over year. But the pressures here run deeper. Insurance premiums of $600 to $800 monthly are common near lakes, often exceeding mortgage payments. In 2024, the city recorded its first net population decline in years, as residents cited rising costs. Builders who bet big on demand in 2021 and 2022 now face empty subdivisions. Many offer discounts, upgrades, or even cash incentives to move homes. Financing difficulties compound the slowdown, with buyers withdrawing from deals at higher rates. Some sellers now list below 2020 prices just to attract offers. Once marketed as a serene lakeside retreat, Winter Haven is confronting the realities of Florida's housing affordability crisis head-on. These 10 cities reveal the fragile underpinnings of Florida's housing market in 2025. Rapid growth and migration drove values higher, but soaring insurance, oversupply, and weakened demand have shifted momentum. While not all are ghost towns yet, the warning signs are clear. Affordability challenges can quickly turn vibrant neighborhoods into quiet, empty streets. Which of these cities do you think can recover and which may continue to decline? Share your thoughts in the comments. We'd love to hear your take. And for more global perspectives on housing, migration, and economic change, don't forget to like this video and subscribe to Global Lens.